Coming up on the SBS On the Money podcast, we take a closer look at the impact of the Fair Work Commission's increase to the minimum wage, gold and oil prices surge, and how the Australian dollar has been hitting petrol prices. All of that and more next. Hi everyone, it's Tuesday the 3rd of June 2026. Later we'll take a closer look at the direction for petrol prices and how the Australian dollar has been impacting it despite a fall in the oil price. First to the Australian share market, which rose 0.6% to 8,466. And it also comes as the Fair Work Commission approved a 3.5% rise in the minimum wage to $24.95 per hour. And that's above the rate of inflation, the annual rate of 2.4%. To discuss that and more, I spoke with Julia Lee from FTSE Russell.
Great news for a lot of workers that are on minimum wage. And if we have a look at the portion of the Australian workforce, it's about 21% of the workforce, or around about 2.9 million workers. They're going to receive an increase of 3.5%. Now, if we have a look at the first quarter trimmed mean CPI, we saw it falling down to 2.9%. That's the first time since 2021 that we've seen it between that 2 to 3% band that the RBA aims for. Now, when we have a look at how things like wages impacts on inflation, generally an increase in demand sees an increase in prices, and a decrease in demand results in a decrease in prices. So if you can imagine 21% of the workforce seeing a bit more money coming through the door, usually there's an inflationary effect there. So inflation is going to be an important one for the market to be watching, especially when it comes to interest rates.
When we talk about the markets today, what's driving it, and is there anything investors need to be aware of as we approach the end of the financial year?
The good news is that we are seeing an uplift for the market today. Of course, one of the key things that the market is watching is tariffs. And the fact that we have seen some of those tariff pauses being extended until August has been positive news for the market. Of course, the show is not over there, so just watching the headlines, and it does look like the US has asked for any tariff deals to be done to come to the table sooner rather than later. So it does look like more headlines could come to the market relating to those tariffs. The end of financial year is also an interesting one as well. And that's because we do see activity related to the end of financial year. Generally, investors, they tend to look at cashing out of some of their investments that haven't done so well in order to collect those tax losses. And some of those underperformers for the year, when it comes to July, sometimes we can see a bit more of an uplift in terms of July if they haven't performed so well in June. So looking at potential tax loss selling, usually that hits the underperformers, but those underperformers, some of them are generally bought back in July. So watching for a potential uplift there.
If we look at the performers on the market today, there's one that really stands out. That's IDP Education shares, down quite significantly. What can you tell me about that?
Look, this is a company that looks at international students and services. And when you have a look at migration policy or immigration policy here in Australia, as well as other countries, that's had a negative impact in terms of its outlook. We have a look at migration policy that's changed in Australia as well as in Canada. And there's a white paper on migration in the UK as well. And these are major destinations for international students. So how that relates to IDP is that it does mean that it expects lower international student placements. That's expected to be down 28 to 30% this financial year. Lower English testing volumes, that's expected to be down by 20%. And of course, that means a downgrade in terms of its earnings, which is expected to come in between $115 million to $125 million in terms of earnings before interest and tax. It not only hits FY25 this financial year, but it also has an impact in terms of the outlook for next financial year. So it looks like a business review also on the cards there, and a very steep fall in price to reflect that outlook, down as much as 40% today.
Julie, we also saw a big rebound, though, in commodity prices today, particularly gold and oil. Why?
Well, oil specifically, we've seen an OPEC Plus decision, and it does look like 411,000 extra barrels of oil will come to the market a day. Now, that seems like a negative for oil price, but that's less than what the market was expecting. What we are seeing is OPEC Plus. That group is trying to normalize some of the oil cuts that we have seen over the last 5 years that has been in place to support the market. Gold, on the other hand, is benefiting from an increase in geopolitical risk. We have a look at the gold subsector. It's doing very well on the market today. And in fact, if we have a look at over the last 52 weeks, the gold subsector has been up a huge 73%. So no doubt, a lot of happy gold investors in the last financial year.
Now, it's interesting to see that the oil price rising, even though we're getting some mixed news out of China. China manufacturing activity falling to its weakest levels since September 2022. So what's your take?
Ricardo, you're absolutely right. China has a big impact in terms of our materials as well as our energy sector, probably more so in terms of our bulk miners like Rio Tinto as well as BHP Billiton. Today, unfortunately, some bad news coming out of those factory orders and activities. The Caixin survey showing a drop below that 50 mark, which separates contraction from growth. So coming in at 48.3 points. I guess what we are seeing is that tariffs are having an impact in terms of factory activity, and in particular, new export orders have been hit quite hard here. So just watching those factory orders and I guess those tariff conversations that are happening between the US and China.
And finally, we heard from the RBA today. It released its latest board meeting minutes. It said that it did indeed consider a 50 basis point cut last meeting, but still went for 25. What's the market now pricing in terms of future interest rate cuts?
We've actually seen the Assistant Governor, Sarah Hunger, with a speech today in Brisbane, and it does look like the RBA not only considered an outsized move, but also a tariff peace situation. So it does look like there was a bit of scenario analysis happening with the latest RBA meeting, which saw interest rates here in Australia drop to 3.85%. We have a look at what the market is predicting. At the moment, it's predicting another 225 basis points move, so down to 3.2% by the end of the year. But a lot of that is going to depend on the policy outlook. And as Sarah Hunger pointed out today, it's very difficult to predict those policy decisions when those conversations are ongoing at the moment.
That's Julia Lee there from FTSE Russell. From the share market to petrol, where the ACCC says average petrol prices rose in the March quarter despite lower oil prices because of a weaker Australian dollar. To explain, Rhayna Bosch spoke with the Commonwealth Bank's commodity analyst Vivek Dhar.
So, Vivek, the ACCC has today released its petrol report for the March quarter, which showed an increase in prices. Now, that's despite oil prices having fallen largely over that period. The Australian dollar has been blamed as the main driver. What's your take?
I think it's very much an appropriate take. In terms of how we really look at what's driven petrol prices in Australia, it's really been that oil price and then that Australian dollar. And the fact that we've seen it weaken so much in that first quarter, it explains very much why you would see higher petrol prices in the March quarter.
Looking at the current petrol environment, though, and the broader economic environment, the Australian dollar is going back up again. It's sitting around that 65 US cent mark. We then have oil prices, which are sitting around 60 to 65 US dollars. So how are things looking for you at the moment?
So look, it's probably a really good time to give a forecast because our view is for the oil to stay around $65 a barrel. And we have the Aussie dollar moving to about 66 cents by the end of the year. So in terms of where we think steady state is, we are thinking, in that $1.70 to $1.75 a litre for petrol. And that's really where our expectations are in the second half of this year. But if I had to say where the risks are in the very near term, I would say that there is a risk that prices may lift. And some of that is being driven by a lot of the geopolitics that are playing out right now. So on the one side, we have talks between Russia and Ukraine not panning out, and people are worried that could see Russian supply at risk. But the one thing we'll warn is, yes, markets will be worried about that, but it has been extremely difficult to limit Russian oil exports. We saw sanctions earlier this year delivered by the Biden administration before he left, and that had a very minute impact in terms of Russian oil flows. So we think the market is a little overdone on that, and that it won't really materialize. But where markets have really got some concern is Iran, because of the fact that they can't get through this deal in terms of this US-Iran deal over the nuclear program in Iran. We could see potentially sanctions enforced, and that could sideline about 0.5% to 1% of global supply. That was our expectation, even before the Trump administration came, but that is something that could certainly play out in coming months. But even worse than that is there is the threat of military violence in the Middle East, which, if it particularly targets Iran, that could certainly see oil prices rise quite a bit. So I think those concerns have priced in, and that's pushing that oil price higher. And that's probably the near-term risk, we would say, to even petrol price in Australia, is that it could rise. But overall, I would say the risk, if I looked past the next few weeks, would certainly be that prices could track back down to about $60 a barrel. Our worry right now is that OPEC Plus are going down a strategy where they're trying to limit US oil production growth. And that means that they are targeting Brent oil future prices of about $60 to $65 a barrel, close to the $60 barrel mark. And that is something that could put pressure on the other side. So we are watching this space very, very closely. But on the case where prices do fall for oil, which is our risk scenario, we could see petrol in Australia come down to about $1.65 a litre. So that's something that we're looking at very closely. But that whole paradigm now in oil markets is geopolitics on the one side and OPEC plus strategy on the other.
Now, these threats obviously are still yet to really materialise, yet the Australian Institute of Petroleum said that last week petrol prices here in Australia, at least on the retail level, went up between 5 and 6 cents a litre. Why is that?
So look, if I had to step back and look at some of the other drivers right now, yes, like one aspect has been that oil has lifted and that has an impact on sentiment. But I would say some of the other factors, which we don't really include as the primary drivers right now, given it's been largely stable, is refinery margins. So refinery margins, when we talk about oil, you have the oil price, but then if you look at petrol, you have to have the refinery in the middle, and their margins matter. Now, those margins have actually increased because we've seen refinery outages around the world. And this is something that, because it has lifted, that does translate through sometimes to higher prices. And this certainly was the case when the Ukraine war started. This completely dislocated markets, and that's why diesel prices certainly lifted in that period. But the slight increase we've seen through this year on refinery margins has been a factor, which I think probably played through in terms of higher petrol prices. But we don't think of it as so significant relative to oil prices and the Aussie dollar.
That's Vivek Dhar there from the Commonwealth Bank. Don't forget, if you enjoy the podcast, to give it a rating or review on Apple Podcasts and Spotify, and to click subscribe.
This SBS On The Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It is not personal advice, and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.